Welcome to Financial Strategies with Andrew and Daniel Adjemi, powered by the Retirement Income Store and brought to you by Adjemi Financial Strategies in Guilford, Connecticut and Denver, Colorado.
You know, Dad, people ask me a lot of times, they'll say, or I'll ask them and I'll say, have you ever tried mountain biking? And I always get the same response. People will say, that sounds really risky. I see people flying down these mountains and it looks crazy. And that's just too scary for me. I don't want to do it. And what I usually end up telling people is, you can take as much risk on or as little as you want in mountain biking, because you could do a simple thing like ride around Dillon Lake, which is gorgeous. And you see the big snow-capped mountains in the background, and there's camping, there's the beautiful lake, and there's little beaches you can stop along the way and take a break. Or you could go up to the top of those mountains and you could ride down those things. You could ride on the edge of cliffs and just fly down these things and hop over rocks or climb up steep rocks. But it's up to you and your skill level, your risk level of how much you want to take on. I'm Daniel Adjemi.
And I'm Andrew Adjemi, and welcome to this edition of Financial Strategies with Andrew Daniel Adjemi, because people don't know what people don't know. Today's topic is risky business, because we're wanting you to be able to understand risk and what's behind the risk that you're taking. As long as you understand the risk and you're willing to take it, that's fine. But what we are against is people taking risk and not understanding what is behind the risk. So Daniel, that's really interesting, how people's view and perspectives regarding risk and what's happening is different, right? Everybody's got different definitions of risk and whatnot. When we're talking about the different kind of risk, when dealing with investments, the list, are things like interest rate risk and market risk and inflation risk and business risk, financial risk, liquidity risk, exchange risk, country risk, and systematic risk and correlation risk with lack of diversification. A lot of different risks that are going on. And I wonder if the people in our audience, their heads are spinning at this point because they're not heard so many risks that are involved with these things. What one do you want to start with today?
Well, I think we need to set it up because most people will say none of that matters. I have money in the bank and that's safe, or I have a financial person that watches out for those things for me. Yeah, and there's two things that have changed over the years that are really big that people why we're talking about this risky business. The first is that because of the last two huge financial crises, we had the tech bubble, and as far as interest rates go, we never recovered from that back in 1999, 2000, right? And then 2008, 2009, the housing crisis. We tried to start recovering from that as far as rates go, and we'll get into exactly what that means in a bit. But we tried to recover from that and started raising rates in 2019 or 2018, and that crashed the market. And they decided we can't raise rates anymore. So what does that mean for people? Well, that's nice if you're buying a house or a car, you have low interest rates. But what that means for you if you're a saver is you're actually having negative carry. You're losing money when you save, when you put it in the bank. So you're actually incentivized to borrow money at nothing and then, throw it into risky stocks or do this or do that, because of the way the system is. There is not a risk-free way of investing anymore, because it used to be you put money in the bank and you earn a nice rate. You get a 6% CD. You put your money in a U.S. Treasury, a 10-year Treasury. That was considered a riskless asset because you could generate 6% return. That'd be nice to retire on, right?
Yeah.
You take $1 million, you put it in there. You have no risk of losing your principal, and you collect $60,000 a year. Well, what's happened because we've lowered rates is it's created moral hazard. And then because of this huge pandemic, what we've done as a world, and especially the US, is we've started creating more money to paper over, right? To paper over some of these cracks in the system. And what that has done is that has escalated the risk of having money in these safe, right, quote unquote, safe assets, because you're losing every day, you're losing purchasing power. And that's why we're having this conversation, to help people realize some of these risks and how they actually do apply to them and their situations.
Right, right. And losing purchasing power is a significant thing, as just since the beginning of the year, right? Gas has gone up 50 cents or 50% per gallon. And we're not able to buy as much gas for the same money anymore. So, I appreciate you folks in our listening audience. And I want to let you know that you're listening to Financial Strategies with Andrew and Daniel Adjemi, because people don't know what people don't know. So we want to help them and educate them. Today's topic is risky business. And if you are interested in learning more about this, we have a paper that goes along with today's show called The Importance of Financial Defense. When you're taking risks, there's defense that you need to be able to defend yourself against. And so we want you to be able to understand that. You can have that paper, Financial Defense, or Importance of Financial Defense, by calling 800-725-7616. 800-725-7616. Well, again, today's topic is risky business. We're wanting you to be able to understand the risk and the risk that you're taking, and choose the risk that's right for you. All right. It's kind of, you might say, well, it's kind of like the cleanest, it's the cleanest dirty shirt that you have. There's a risk across the board. It doesn't matter what you're investing in. If you invest in a bank, there's risk, there's interest rate risk, there's inflation risk. Invest in the stock market, there's various risks. So the question is, what is the cleanest shirt in the out of all the dirty shirts in the laundry basket for you to wear today when it comes to risk? So what we want you to be able to be clear that, again, the risks that are involved are interest rate risk and market risk, inflation risk, and all these different kinds of things. And Daniel, when you were talking about the purchasing power, that in my mind, that fits definitely the inflation risk aspect, as rates and costs are going up. We're recognizing books that were $25 are now like $35, right? That's already starting to happen. Significantly as a result of the pandemic and such, and $5 trillion. But, in interest rate risk fits in there too. And you were saying that too. So, how do those, work? They can work with each other, against each other, or what?
Well, let's think about the biking story again, right? So you walk into, right, we talked about mountain biking. You walk into your bike shop and you say, I want a nice, safe bike. So they say, okay, here's a nice, safe bike. As long as you don't go more than 5 miles an hour on this bike, we'll promise you nothing will happen to you and everything will be okay. You go 10 miles an hour, the spokes start loosening up, but we're not going to tell you that. I mean, you could read that in the fine print. We won't tell you about that. As long as everything's going smooth. And if you don't go down any big hills, you can put your feet down to stop the bike. But if you go down any big hills, there's no brakes. Safe bike though. Okay. Safe bike. And that's what's happening a lot of times when people look at their investment portfolio. They say, you're well diversified, right? And you're diversified through funds that own potentially the same things, but a bunch of funds. And maybe, one of those things on there was currency risk, or one of those things on there was country risk, right? So you diversify across all these funds, that some invest internationally and maybe some invest in corporations and governments. So then you say, okay, cool, I'm diversified, but you're just in more funds that trade the same way as a stock, right? And then you're in other countries, but it's still denominated in the US dollar. So you don't, so if the dollar devalues, right,
Right.
you still own dollars. You don't own other currencies, or you don't own other asset classes like, say, maybe gold, right? Or, and then you say, okay, well, let's get some gold. So they buy GDX or they buy GLD, right? And GLD is a famous one because if you want to buy gold in your account, in your mutual fund, or I'm sorry, in your investment account, your IRA, you buy GLD. And and the problem with that is it's a fund, right? And are they backing that by actual gold, or is it paper gold? And then so now you're saying, well, now we're trusting the banks again. So now that's the same as owning the banks, and it's the same as owning the other funds, right? So it's the disease of ease, what's happening. And so that's like hopping on the bike, and it's safe as long as you don't do anything. As long as nothing out of the ordinary happens, you're safe.
And as long as the stock market goes up, you're good. But if it goes down or goes sideways, watch out, right? And we
Right.
know the market goes three directions. All
But
right.
in the bike story, it's too complicated to go into all, like, well, if you go faster than this, the chain comes off. And if you come down a hill, then the brakes aren't really powerful enough on this particular. So they say everything's safe, and you could read the manual
Right.
if you want to find out if you're in any adverse situations, what happens. And that's the funds will tell you in their perspectives the dangers, but nobody's telling you that. So you have to become Columbo, right? You have to become Columbo, and you have to
Right.
start asking the questions to make sure you're taking the risks that you want to take.
Right.
You said the cleanest dirty shirt in the hamper, right?
Right.
um, there's not a riskless investment anymore, because we talked about the bank and you're losing purchasing power, right?
Right.
They, to get us out of the great financial recession, right? The housing market crash, to get us out of that, over that 10-year period of time, they spent $1.8 trillion,
Uh-huh.
and the economy wasn't recovered, because when they started to raise rates again, it crashed.
Right.
You know how much they've already spent on this COVID thing?
Uh, 5 trillion.
6.1. And now we're already
Wow.
talking about another 2 trillion.
Wow.
That's
Terrible.
after the 1.9 that just came out, right? They're already talking about another 2 trillion. So
Right.
this is insane, because that's another risk, is when you start issuing debt to cover to cover expenses.
Yeah.
That is good in small amounts, because it helps you grow your business, right?
Uh-huh. Uh-huh.
It
Right.
helps you buy a house. It helps, but then once that gets so big that you can't cover the interest payments, it doesn't become conducive to an economy. It's just needed to keep everything from falling apart, and that's why it's
Wow.
taken so much more debt to keep the economy going this time from the COVID than it did from the last financial crisis. And
Gotcha.
that's where you lose purchasing power, because the more dollars there are in the system, that means what?
The more dollars means that you're not going to that things are worth less, right?
Exactly. Exactly. Hey, think about supply and demand. Anything, the more and more you have of it, the less
Right.
valuable that becomes. And
Right.
that's what's happening to all fiat currencies right now. And that's why we say those risk-free, quote unquote, investments are no longer risk-free, because you have more loss potential from devaluation than you've ever had in the history of the United States.
All right. Well, we need to take a break. And this is all insanity, right? Financial insanity. And so we have the book, Financial Insanity, written by David Scranton for you folks. He's the founder, president of the Retirement Income Store. And we have this available to you if you'd like to call us, 800 725 7616. And all we ask in the spirit of there's no free lunch is to be able to speak with you about the book after you read it for about 10 minutes. Okay. Read the book and let's speak for 10 minutes on that. Again, Financial Insanity. You can call 800 725 7616 for that. And we also have the piece that goes along with today's show, the paper called The Importance of financial defense, the importance of financial defense. Either one by calling Megan at 800-725-7616. And we'll be right back after this.
History tells us the market goes up and the market goes down. What would you do if you lost half of your retirement savings? It's time to make the shift to steady, reliable retirement income. And where do you go? The Retirement Income Store. Log on to agemy.com for your free retirement review. That's AGEMY.com. The Retirement Income Store, where retirees go for income.